multi-product break-even point, we have already done single product break-even point. So what we have learned, we have done, break-even point, BEP, we have done BER, break-even revenue. Then we also did some charts, break-even point chart, contribution margin chart, profit volume chart, etc. And we have come to the point, multi-product break-even point. This topic is becoming more and more interesting. So what is the purpose here? Because when we were doing break-even point, we assumed, or we actually, created an example where a business was producing just single product. But this is not something which is very realistic because businesses do not produce single products, they produce multiple products. Okay, like if you are a manufacturer of furniture, you probably are making tables and tables and then chairs as well. So if you want to now break even, we want to find out that how many tables and how many chairs should you make to break even. So before you were only making tables and you said, okay, I need to produce 100 tables and then I will do break even. Now the question is that you're not only producing tables, you're producing tables and chairs. So then how many tables and how many chairs as a set you should produce to do break even? So the number of break-even quantity of tables and break-even quantity of chairs, and then the break-even revenue from the tables and the break-even revenue from chairs, and then the total break-even revenue which you need in case of multi-product break-even. So that looks interesting. And it is actually interesting, very realistic, but it does have some, how to say, limitations. Limitations, there are two things you need to understand. Number one, we are going to speak about a single mix, which means one set of units, okay? A single mix of product. You will not have multiple mix of product. And number two assumption is that the mix remains same. The mix remains same means that the mix of the product, for example, if I say one table, and then 6 chairs. So this is called one set. So this is my mix. I will call it, there is one mix which is called one table and 6 chairs. So now there are two products here, and then I need to find out how many number of tables and how many number of chairs and so on. Okay. Break-even point BEP, the formula remains pretty much same. Before also you had your total fixed costs on the top and you were dividing it with unit contribution. For single product, formula was fixed cost divided by unit contribution. This time you will have the same fixed cost, but you will have weighted average unit contribution. Not unit contribution, but the weighted average unit contribution, which means the contribution which you are getting from this mix. So remember, one table and 6 chairs. So this is one mix. So what is the contribution, the total contribution from this mix? How much do you get as a weighted average? This is what we need to calculate. It would look a little bit difficult, but it is actually not. If you understand it conceptually, then it will be easy to apply. And then you have break-even revenue. If you remember, break-even point was expressed in terms of number of units. Like I would say, okay, I need to produce 20 tables and 120 chairs, maybe 10 tables and 60 chairs and so on. This is in terms of number of units, but you also want to calculate break-even revenue in terms of dollars. And the formula will remain weighted average fixed cost divided by weighted average CS ratio. So if you remember, for single product, you had the same formula, which was like fixed cost, and you say fixed cost divided by CS ratio. This was the formula for single product break-even revenue. This time you only add weighted average because there are more than one products. You have 2 or maybe 3 products. So then you need to calculate weighted average. To understand this topic in a better way, we will solve one question together, and so that the numbers and figures come in front of us and we can actually see how does it work. So we'll start with one question. It says, suppose that PL company produces and sells 2 products. The M sells for $7 per unit and has a total variable cost of $2.94 per unit. So that was going to give you contribution sales price minus variable cost, while the N sells for $15 per unit and has a total variable cost of $4.5 per unit. So N is selling for 15, variable is 4.5, so 15 minus 4.5, that is going to be the contribution from each unit of N. So we always need this data, how much is the selling price and how much is the variable cost, so that we can calculate the contribution. And the data is given. For a single product, this type of data is enough. But when you are doing for multiple product, you also need to find out how much is the ratio between how many M and how many N, the mix, the product mix. Anyways, the second part of the data is always we need fixed cost, because the formulas will involve fixed cost divided by weighted average contribution, or fixed cost divided by CS ratio, etc. So fixed costs are $36,000. So that's given. And then they tell you what is the total break-even revenue. What is the total break-even revenue, BER, they're asking you. We will actually calculate BEP as well, but they're asking BER. So what is the total break-even revenue? Okay, in this questions, what is missing here? What you already always need is the product mix. The product mix means that for how many M, how many N's are sold. So they tell us here that a mix in this question is 5 M's and 1 N. And that has to be very much carefully understood. So I'm always looking at my selling price and variable cost so that I can calculate my contribution. And then because I need to calculate my weighted average contribution and my weighted average, mix. So I need to know how many M and how many N. So it means that for every 5 M, you are going to sell 1 N. So the ratio between M and N is 5:1. Okay. So we got this information. Let's see the solution. So calculate the contribution per unit. This is always the first step. So M and N, selling price is 7, here 15, variable cost is 2.94, 4.50. It was given in question. So we got a contribution of 4 from M and 10.50 from N. And remember that M is sold in quantity of 5 and N is sold 1. So for every 5 M, there has to be 1 N. This is a limitation in this method. I mean, if you change this ratio, then you cannot apply the formula. So then we calculate the contribution per mix. So what is mix? Mix is 5M and 1N. So 4.05, 4.06, the contribution times 5, and then 10.50 times 1. I mean, the ratio in which they are sold. So for every one set of this M and N, 5M and 1N is giving you actually 30.80 contribution. If you can calculate until this point, then things become pretty much easy. Now, we know that every single set is giving me a total contribution of 30.80 from 5M and 1N. Then we come to step number 3, calculate the break-even point in terms of the number of mixes. So how many mixes you should sell? Now, if you can use a little bit of your imagination, remember fixed cost divided by contribution. So before I was doing fixed cost divided by contribution per unit, this time what I'm going to do, fixed cost divided by contribution per mix, because that is the total contribution per mix. So I get actually 1169 mixes. So in terms of units, I need to sell 11,069 mixes. And I know that in every mix, 5M and 1N. So I'm pretty much sure that you are already on your thinking track of 1169 multiplied by 5, this is the quantity of M. 1169 multiplied by 1, this is going to be the quantity of N, because in every single mix you have 5M and 1N. So we come down to the next step, calculate the break-even point in terms of the number of units of the products. So this is the mixes. Okay, 1169 is the number of sets which I need to sell. But then how many, if I want to see that, okay, how many units do I need to sell? So 1169 into 5, 5845, 5,845 units of M, and 1169 into 1, 1169 of N. So this is now you have come to the point where you know that, oh, I need to sell 5,845 units of M and only 1169 of N, because that's the ratio. And calculate the break-even point in terms of revenue. Then what you're going to do, you know the selling price for this, you know the selling price for this, you just have to multiply them. 5845 multiplied by $7 and 1169 multiplied by $15. That's pretty simple. And you come to a point $40,915 from M and 17,000 $535 you need from N. So this is, so you know that you must be selling 5845 units of M, which will give you a total revenue of 40,915, and 1169 units of N, which will give you 17,000 revenue from N. And then you just make a total. So 58450 is your break-even revenue. So if this is the situation, we ask you that, okay, this is a multi-product, two products M and N, sold in 5 and 1, and this is the selling price, is a variable cost. So how much is your break-even revenue? You will say $58,450 is my break-even revenue. Then the second question might be there, that how many mixes you should sold? 1169 mixes. And then what could be the individual quantities? 5845 units of M and 1169 units of N. Now go and see in your production department, can you make all these things? Then go to the sales department and ask, can they sell these quantities or not, in order to do the break even. Not really very difficult if you understand it conceptually. So this is one way of calculating break-even point in terms of units and break-even revenue for the total mix and for the individual products. Now, if you remember, when we were doing single product break-even, we said that we can calculate break-even using the CS ratio method as well, because sometimes the data is given in such a way that this method cannot be applied, because you can use this method when you have sales prices are given, or maybe variable costs are given, so you can calculate your contributions and so on. Sometimes you are forced to use another method, which is called the CS ratio method, which we did in single product break even. We can actually apply that same CS ratio method in multiple product as well. So let's see for multiple products how to do it with CS ratio. So the CS ratio can be used to calculate the break-even point in terms of sales revenue for single product. And this is also which we can use for multiple. We can calculate, remember CS ratio was contribution to sales ratio. So in that case, when we were doing single product, we were calculating the contribution from a single product divided by the selling price of the single product. But in this case, when you have multiple product, you are talking about a mix of two product. So you will be thinking like, what is the contribution from the total mix and how much is the selling price of the total mix? So you divide the contribution mix from the mix divided by the total selling price of the mix to get the CS ratio. This is the only difference. And this is not something very illogical or irrational. That makes perfect sense. So we need to find out what is the revenue per mix, which means the selling price per mix. You remember that 5 units of M, each unit of M was $7. I'm continuing the same data. And then for N, you sell only 1 unit, selling price was 15. So your selling price for the mix was 50. Then you calculate your contribution per mix. So contribution per mix was 30.80. We calculated this before. How was it done? I remember 5 multiplied by 4.06 and then 1 multiplied by 10 point something or so on. 30.8 we calculated before. You want to see, I go back. Where did we calculate contribution from the mix? This was contribution. This was the contribution of 1 unit of M, 1 unit of N, and then 5 M's and 1 N. Together it made 30.8. So this is the same contribution per mix which we are going to use here. So we say that we have got contribution per mix, which is 30.8. Now things look like contribution per mix divided by selling price per mix. You get your CS ratio, which is 61.6%. 61.6%. You can also call it 0.616. Last step is calculate your BER, break-even revenue. So BER, break-even revenue, what was the formula? Formula was fixed cost divided by CS ratio. Fixed costs are the same, $36,000, I think. Yeah, $36,000 divided by 0.616, which is 61.6. It's the same thing. So you got your break-even point, break-even revenue actually. Let me just correct it. This is not break-even point. I would rather prefer to call it break-even revenue, because when I say point, I refer to the number of units, but here I'm calculating it in dollars. So this is my break-even revenue, 58,442. It is actually quite close to the same one which we calculated before. Let me go back and see what do we have here. 58,442 using this method. The previous method which we were doing, we actually calculated 58,450. So there is a very little difference, which is the rounding off difference. Okay. So the first method gave me $58,450 is my break-even revenue. And this method is giving me 58, not 450, but 442. This is because 0.6166, something like this. Okay. So I have calculated my break-even revenue using the CS ratio method. But then you might be thinking, can I also calculate break-even point using the CS ratio method? If I have the CS ratio method I'm using, I did break-even revenue. What about break-even point? How many units of M and how many units of N? So that is step number 5. Calculate the revenue ratio of mix. What is the revenue ratio? Remember, the total revenue from two products is 50. Total revenue from two products is 50, out of which some revenue belongs to M and some revenue belongs to N. So what is the ratio of this mix? So we see it is 35 into 15, because we remember that we were selling 5 units of M for a price of 7 and 1 unit of N at a price of 15. So that makes me 35 ratio 15. If you divide it with 5, you get an answer of 7 ratio 3. So the ratio in the revenue, so this revenue, which I have total break-even revenue, 58,442, it can be split between M and N in the ratio of 7:3. This is the total mix revenue. So how much belongs to M, how much belongs to N, that should be based on the ratio of the mix. So this logic we will continue, that 58,442 total revenue into 7 by 10, this goes for M. So this is 40,909. Again, this is in terms of dollars. It is not in terms of units. And I want to see the unit, number of unit. And that is very easy, because if the total revenue from M is 40,000 and 1 unit of M was sold for $7, so you divide these two, 5844 units of M. And this is actually very much similar, which you calculated before, 5844 units of M. Remember when we were calculating before, how much did we calculate? 5845. Here it was 5845. A little bit of difference because of the rounding factor. Okay, so this is for M. And then I can do similarly, same method for N. 58442 is the total revenue into 3 by 10, because the ratio is 3 by 10. Why I'm taking 10, by the way? Whenever you do ratio proportion, you see what is the total. If the total is 10, so it means that total are 10 portions. Out of 10 portions, 7 portions belong to M, and out of 10 portions, 3 portions belong to N. So this is the concept from the total. So you make a total 7, 3. So whenever you have a ratio of 8:5, so you will say, okay, the total is 13. So this product is taking actually 8/13, and this one is taking 5/13. So you always need to make a total, okay? Maths, basic maths. So 17,533 is the revenue from N. And then you divide this with the selling price of $15, 1169 units of N. This is exactly the same. 1169 we calculated before as well. So now, it might take a little bit of time, in performing the calculations. And I understand that some people who are good in maths, they will do it very fast, because it looks less like an accounting and more like maths. But it's not really difficult. Once you understand it conceptually, find out what is the mix, what is the ratio, 5:1, whatever. Find out the contribution per mix, find out the selling price per mix, and then, move on. It's very logically straight thing. I don't think that there is anything which you need to remember. It's 100% understandable. And if you try to remember, you will actually punish yourself. If you try to understand, you will never forget.